Hello class, today we're going big, and I mean 5 minutes big. We're mastering the wheel strategy. It's the ultimate way to generate consistent income while owning your favorite stocks. Strap in, it's going to be a wild ride. At its heart, the wheel is a cyclic option strategy. We start by selling puts to get paid while waiting to buy a stock. Then, if we buy it, we sell calls to get paid while waiting to sell it. It's a beautiful, profit-generating loop. Step 1 is the cash-secured put. You pick a stock you actually want to own and sell a put option below the current price. You're basically saying, hey, I'll buy this stock if it hits this price and you pay me for the offer. We call it cash secured because you keep the money ready in your account to buy the stock if needed. This isn't gambling on margin. It's a disciplined, professional way to enter a position. The moment you sell that put, you collect the premium. That's cold, hard cash that stays in your pocket no matter what. It's your reward for providing insurance to the market. If the stock stays above your strike price by expiration, the contract vanishes. You keep the cash, your reserved funds are released, and you just sell another put. We call this rinse and repeat. But what if the stock drops? Then you get assigned. You buy the shares at the price you agreed on. Don't panic, this was the plan. Now you're a proud shareholder of a great company at a discount. Now we move to step 2, selling covered calls. Since you own the shares, you can sell a call option against them. You're getting paid again while you wait for the stock to go back up. It's called covered because your shares cover the obligation. If the stock gets called away, you already have the shares to deliver. No extra risk, just extra income. If the stock stays below your call price, you keep the shares and the premium. Then you guessed it, you sell another call next month. This is how we generate a dividend on demand. If the stock price moons past your call, the shares are called away. You sell them at your price, keep all the premiums you've collected, and take your profits. Now the cycle is complete. The secret to the wheel isn't the options, it's the stocks. Only wheel companies you'd be happy to hold for years. If the stock goes to zero, the strategy fails. Pick quality, always. When picking strike prices, be conservative. We want a high probability of success. Aim for prices where the stock has strong support. Don't get greedy, patience is your best asset. For expirations, the sweet spot is usually 30 to 45 days out. This is where time decay, or theta, starts to work its magic in your favor. Let time do the heavy lifting for you. Trading is 90% psychology. Don't chase the stock if it runs away, and don't panic if it drops. Stick to the mechanics of the wheel. Consistency is what builds real wealth. Manage your risk by never putting too much of your account into one wheel trade. Diversify across different sectors to keep your portfolio balanced and your stress levels low. Think of the wheel as a marathon. It's not about one big win, it's about hundreds of small wins that compound over time. This is how professionals approach the market. So to recap, sell puts to get in, collect premium while you wait. Get assigned, sell calls, and collect more premium. Repeat until you're sitting on a mountain of bananas. Now you have the knowledge. Start small, pick a great stock, and take your first spin. The market is waiting for you, class. That's our deep dive into the wheel strategy. You're now officially a graduate of the Minion Masterclass. Like, subscribe, and stay yellow. I mean, green. Class dismissed.